see my screen? And please also confirm if I'm audible properly.
Yes, audible and presentation is visible now.
Okay. So, good evening, everyone. As all of us are aware that the 47th GST Council meeting happened last month towards the end of the month of June. And the press release itself was a 9-pager document, and it had a lot of changes, suggestions that the GST Council had made, right from the changes in law to changes in rules, amendment of notifications, rate notifications, and the normal central tax notifications, as well as issuance of a lot of circulars were proposed by the GST Council. And in no time, in the next few days, we saw a flurry of all these notifications which implemented these changes. So today I am here before you to discuss all these amendments that have come in, and I'll try to cover as many notifications, circulars, as well as the amendments that have been proposed by the GST Council or implemented after the GST Council meeting. We will deliberate on that. I would say this was a sort of mini budget from the GST Council. The number of notifications and circulars that have been issued post this GST Council meeting, it was no less than a small interim budget. With that, I will, So first of all, I'll deal with certain clarifications that were issued pursuant to the GST Council meeting. The first was in respect to deemed exports. In case of deemed exports, there were certain questions that were raised to the board on whether the input tax credit that was being refunded to the deemed export through the deemed exporters, what would be the treatment in those cases. The question that was raised was that in case of deemed export, whatever is being refunded to the deemed exporters is in the nature of refund of the tax charged. It is not an input tax credit. However, for procedural compliances, these deemed exporters were required to first avail the credit and then show it as a debit in their credit ledger at the time of claiming the refund. So a question arose as to whether for availing this input tax credit, whether the restrictions under section 17 would apply to such refunds or not, or availment of the ITC or not. The council has clarified, and after that, the circular number 172/04 by 2022, dated 6th of July 2022, has been issued, wherein they have said that the procedure which was prescribed by the circular number 147/2013 of 2021 only provided a procedural requirement claiming the ITC in the electronic credit ledger and then debiting it with the refund application. It did not in any way mean that ITC was actually being availed. Hence, ITC restrictions under section 17 of the CGST Act would not apply to such refund. Similarly, such ITC availed is also not to be included in the net ITC for computation of refund of unutilized ITC on account of zero-rated supplies made by the recipient of the deemed export supply. So in a nutshell, whatever credit they are taking and debiting at the time of claiming of refund, that is only a procedural requirement, and in substance, such amount is the refund of tax charged to such deemed exporters and not input tax credit. Next is a clarification in respect of perquisites that are provided to employees. Questions were raised as to whether these perquisites would fall within the ambit of supply, whether any other implications would be there. In this regard, it has been clarified that the perquisites provided by the employer to an employee will not be subject to GST when the same is provided in terms of contractual agreement between the employer and the employee. So if at all the contractual agreement covers certain perquisites, then in that case, whatever amount of perquisites that are given by an employer to an employee would get covered within the employer-employee relationship, which is as such not liable to GST, which has been clarified by the GST Council. Next is in relation to blocked input tax credit. There's a proviso which has been inserted to subclause 3 of clause B of schedule of subsection 5 of section 17. The question was raised as to whether this will apply to only subclause 3 or the entire clause B. It has been clarified that the proviso inserted at the end of clause B at the end, after the subclause 3 of the clause B of subsection 5 of section 17 would apply to the entire clause B and not only subclause 3. Accordingly, ITC in respect of goods or services or both shall be available where it is obligatory for an employer to provide the same to its employees under any law for the time being in force. Accordingly, also, ITC in respect of such supplies of food and beverages, outdoor catering, health services, etc. shall be available if the employers are obligated to provide such services to their employees. Section 17, subsection 5, clause B and subclause 1 bars ITC in respect of leasing of motor vehicles, vessels and aircraft. The question was raised as to whether the words leasing would apply to only these three categories or is restricting ITC in respect of all sort of leasing activities. It has been clarified that the bar is only in respect of leasing of motor vehicles, vessels and aircrafts. It does not bar the ITC availment in case of other leasing activities. Next, a clarification has been issued in respect of usage of electronic balance available in the electronic cash ledger and the credit ledger. It has been clarified that the amount available in the electronic cash ledger can be utilized for making any payment towards output tax, self-assessed tax, whether it is self-assessed or payable in case as a consequence of any proceeding instituted by the department. Accordingly, the amount of cash ledger can be paid for any tax liability. What is to be allowed in case of electronic credit ledger is it can be used for making payment of any output tax, and such payment can be towards the self-assessed tax in the returns or the tax payable as a consequence of any proceedings instituted. It cannot be used for payment of tax under reverse charge mechanism, since reverse charge mechanism liability is not an output tax liability. It also cannot be used for making any payment of interest, penalty, fee or any other amount. And it cannot be used for making payment of erroneous refund sanctioned in cash. Would like to clarify here that in case of electronic cash ledger, it can be used for making all these liabilities, that is a payment of reverse charge mechanism, interest, penalty or any fee or any other amount, as well as making payment of erroneous refund which is sanctioned in cash. Only one thing that the participants would note here is that in case of utilization of credit available in the electronic credit ledger, there is a judgment of Honorable Orissa High Court wherein it has been held that pre-deposit in case of an appeal can be made only in cash. Now, there is no clarification in this particular circular with respect to the electronic credit ledger, whether as to they would want to allow utilization of balance of electronic credit ledger for making payment of output tax, for making payment of the pre-deposit amount. The Honorable High Court had held that this pre-deposit is not in the nature of output tax. Hence, it cannot be used for making payment by the balance available in the electronic credit ledger, and it has to be made using the balance available in the electronic cash ledger. No express clarification has been provided in this circular, and that question still remains open. Refunds under in case of inverted duty structure where the input and output are same. There was a circular number 135/05/2020 which clarified that refund of accumulated refund of accumulated input tax credit under clause 2 of subsection 3 of section 54 would not be applicable in cases where the input and output supplies are the same but attract different tax rates at different points in time. A question arose as to whether cases which are in cases where somebody is getting a concessional rate of tax because that person is providing the outward supply to specific persons, or in certain specific notified cases, what happens in those cases, whether it would be covered by this bar which has been provided under which was provided under the circular 135/05. It has been clarified that where the rate of output tax is where the rate of output supply is less than the rate of input tax at the same point of time, due to the supply of goods by the supplier getting covered under a concessional rate notification, the credit of accumulated ITC on account of the same would be admissible. Meaning thereby, today I am purchasing goods which are attracting 18% of tax, and I am supplying it to a special project for which a specific concessional rate has been granted under the exemption or the rate notification. In that case, at the same point in time, my input costed me 18% of tax and my output on the same date was 6%. Because of some concessional rate notification, I would be covered under the inverted duty structure refund mechanism, and I would be very well allowed to take a refund. The only bar is that if I have purchased today at the rate of 18% and later on the goods are lying with me and I am selling those goods at a later point in time where the rate has been reduced by the government, I will not be allowed to claim refund under the inverted duty structure mechanism. It has also been clarified that refund shall not be allowed in cases where the same product attracted different rates of tax at different point in time, as I just mentioned, as well as where the rate of outward supply is either nil or it is fully exempted. Refunds shall also not be allowed where the supply of goods or services are not notified by the government as being excluded from the refund of accumulated ITC. So there are also restrictions which have been provided by the government in all those rate notifications as well as the exemption notifications, wherein it has been clearly specified that refund shall not be granted of the accumulated ITC if the product for which I want to claim a refund is not excluded from such restrictions. Then again, I will not be allowed to take credit even if I am covered under the concessional rate notification. This is clarified by circular number 173/04 dated 6th of July. Now, there is another circular wherein they have given 3 scenarios and they have tried to explain the applicability of provisions pertaining to demand and penalty for transactions involving fake invoices. The first example says that there is a registered person A who has issued a tax invoice to another registered person B without any underlying supply of goods or services or both, whether such transaction would be covered under the definition of supply. Consequently, whether any demand and recovery can be made from A who has issued this tax invoice without an underlying supply, whether any demand and recovery can be initiated against such person A under the provisions of section 73 or section 74, and whether any penal action can be taken against this registered person A. To this, the circular has clarified that A has only issued an invoice without any underlying supply. Hence, it does not satisfy the criteria of supply. Accordingly, there is no supply. Since there is no supply, no tax liability arises against A, and no demand and recovery as well as penal action is required to be made against A under the provisions of section 73 and 74 of the CGST Act. However, A shall be liable to penal action under section 122 subsection A subclause clause 2 of the CGST Act for issuing tax invoices without actual supply of goods or services or both. Hence, in this case, recovery against A shall be initiated or penal action shall be initiated against A under section 122 and not section 73 or 74. Similarly, the circular gives another example wherein in the previous case, the supply was made without an invoice by A to B. In this case, now B avails the input tax credit of the invoice without an actual supply, and then he issues an invoice with an actual supply to his customer, and during issuance of this supply at the time of making payment in his return, he utilizes the ITC which was taken on a fake invoice or an invoice which was without any underlying supply. He uses this liability, this input tax credit availed on the basis of fake invoice to make payment of his outward tax liability which was made for an actual supply. Whether B would be liable for any demand or recovery under section 73. The clarification says that the ITC which has been availed by B is without any underlying supply and is hit by section 16(2)(b) of the CGST Act, which says that in order to avail input tax credit, you should have actually received the goods or services. In this case, B has availed the services as well as utilized the same without fulfilling the condition which is specified under section 16(2)(b). Hence, accordingly, he would be required hence accordingly, B would be required to reverse the ITC and demand has to be initiated against B under section 73 and 74, 73 or 74 as the case may be. He would also be liable for penal action under section 122. In the next case, it has been in the next case, yeah, I think in the next case, the scenario says that in case B avails an input tax credit and also makes a further supply of the same tax invoice, that is without actual making any supply, what are the consequences against B? Again, since he has availed an input tax credit without actual supply, he will have to reverse the ITC which has been taken by him under section 16(2)(b), and simultaneously, because he has issued an invoice simultaneously, as which has been mentioned in the previous slide. Actually, the clarifications have been interchanged in both the slides. So whatever penal action under section 122 1 subsection clause 2 and the subclause 7 shall be liable, whereas in this case, that is where he has actually where he has made an actual supply and a recovery has been made under section 73 and 74 from Mr. B, he shall not be liable to any other action under section 122 in view of the section 75(13). So in case where, to summarize both the cases, in case where B makes a supply, actual supply by utilizing a fake ITC, he will be liable to recovery under section 74. And because the recovery has been initiated under section 74, he will not be liable any penal action under section 122. Whereas if B has availed input tax credit and has utilized the input and has passed on the same invoice without actually making any further supply, he shall again not be covered under section 73 and 74. However, a penal action will be initiated on B for number 1, taking a fake invoice, that is under section 122 subsection 1 clause 2, and for issuance of a fake invoice, he will also be liable to penal action under clause 7 of section 122 subsection 1. The circular also clarifies that any person who has retained the benefit of transactions which are mentioned under section 1A of section 122, that is benefits in respect of a fake invoice, and at whose instance such transactions are conducted, he shall also be liable for a penal actions under the said subsection. The circular says that it is to be noted that such cases of wrongful availment or utilization of input tax credit in case of issuance of invoice without supply of goods or services or both, leading to a wrongful availment of input tax credit or refund, provisions of section 132 may also be invocable, subject to the conditions specified therein. And this invocability of section 132 shall depend upon the facts and circumstances of the cases. As Chairman Sir was initially mentioning during his introduction, there are also certain other clarifications which were proposed by the GST Council. However, circulars have not been issued in these cases. However, whatever briefly was mentioned in the press release of the GST Council meeting, I have mentioned it for the benefit of the audience. The first clarification that was proposed to be issued, which we expect would be issued in a near future, was that any additional fee collected in form of higher toll charges. So we would be aware that in case of the toll charges, now we are supposed to have a FASTag card. If somebody doesn't have a FASTag card, is required to pay double the amount of the toll charges. So it is being clarified that even if where higher toll charges are collected for not having a FASTag, essentially it's a payment of toll charges, and the same HSN and the rate shall be applicable for collection of such higher toll charges, for which a detailed circular is expected from the GST Council. Similarly, it has been proposed to be clarified that in case of purchase of a plot, if the plot seller is also taking separate charges in terms of preferential location charges, it is clarified that such PLC would also form the part of the main consideration that is charged for the long-term lease of land, and shall get the same treatment as it gets for the long-term lease of land. Viewers may note that there are a few advanced ruling contrary to this aspect, wherein it has been held that these PLC charges are a separate supply in itself and shall be attracting 18% GST. The circular seems to clarify the stance of the government on these aspects, and it says that whatever the main taxability of a particular long-term lease of land is, the same taxability would also apply in case of a preferential location charges levied by the lesser of these plots. It seems that these clarifications are based on the principle of the composite supply, which has also been discussed at length by the Honorable Supreme Court in case of Mohit Minerals. So it would be worthwhile to read this circulars or clarifications when they come in, and it would be interesting to analyze on what criteria, whether or on what type of other transactions can these interpretations would also be applicable. Again, the third clarification which is expected is that sale of land after leveling, laying down of drainage lines, etc., is a sale of land itself and does not attract GST. So merely doing an activity of leveling and laying down drainage lines before selling of a plot of land does not alter the nature of the land. It still remains land, and hence it does not attract GST. Again, there were a few contrary advanced ruling in this connection, which seems now after the issuance of clarification, it would be abundantly clear that GST would not apply to such cases. So these were the clarifications, few of which have been already issued and few of which are expected to be issued. There's also one more clarification in respect to GSTR 3B, wherein it has been clarified that in respect of GSTR 3B, certain disclosure criteria have been mentioned by the circular number 170, wherein it has been said that once any credit reflects under the in your GSTR 2B, which has been now reconciliation with GSTR 2B has now been made mandatory with effect from 1st of January 2022. So when anybody is doing a reconciliation of GSTR 2B, it has to be seen as to what amount of credit that is being reflected in the GSTR 2B pertains to block credit under section 17(5) or any credit which is not allowable to the recipient ever in the given facts and circumstances of the case. In that case, it has been said that such credit has to be separately shown in the GST return in the GSTR 3B in the relevant clause. And in respect of ITC, which is appearing in GSTR 2B, but is not being availed by the taxpayer owing to the not meeting the criteria as to not receipt of the physical invoice, not actual receipt of goods, not being able to make payment within 180 days, so on and so forth. That is a temporary reversal of ITC. This has to be shown also separately under the conditions, under the statement that these are being reversed temporarily and shall be availed back at a later point in time. Again, the previous clause that I mentioned with respect to the blocked credit, it should also include the ITC that is being reversed under Rule 42 and 43 on a permanent basis. So this is a broad change which has been mentioned in the circular with respect to disclosures on GSTR 3B. Additionally, the government has also put in public domain a revised format of GSTR 3B that is a very detailed format, and the inputs from the stakeholders have been invited by the government on this new GSTR form 3B, which is a quite detailed one and would help the government to overcome a lot of issues with respect to fake invoicing, etc., that they are facing, and would also government achieve their objective of having a good amount of data analytics through which they can have a proper assessment and proper profiling of all the taxpayers with this, and also at the same time facilitating the taxpayer with respect to proper disclosures. Today, when I have to make certain reversals in respect of many cases or any demand, or there are a lot of reasons for which I would be required to make a reversal of ITC, there is no specific clause that is available where I can mention on what account am I making these reversals, and the taxpayer is required to have this working separately saved with themselves and are required to represent at the time of audits. This revised form would also facilitate the taxpayers in respect of a proper disclosure of whatever reversal or whatever ITC availment, tax payment, etc. that they are doing. So this form has already been put in the public domain by the government, and I urge all the participants to go through this format, and a time of 1.5 months has been given by the government, and a specific link or the communication address have also been given with the revised form GSTR 3B. So all stakeholders are welcome to provide those suggestions to the government. In fact, these suggestions can also be given to the GST and Indirect Tax Committee, and the committee would collate all the suggestions and then properly represent to the government. Moving ahead, whatever changes in law and measures of trade facilitation have been prescribed by the government, I would take the participants through it. This was long awaited notification, and since the GST law has been issued, the payment of interest with respect to an incorrect availment of input tax credit has always been a matter of contention. So this year's budget, there was a retrospective amendment which was proposed and passed in the Finance Act, wherein it was said that under section 50 subsection 3, the input tax credit, wherever it has been availed incorrectly, the interest shall be payable only in cases where the input tax credit has been wrongly availed and utilized. Now, this section was not notified till date, and the participants would appreciate that whenever the government has to make any amendment to the GST law, not only the CGST Act has to be amended, all the state GST Acts, that is all the acts of the respective states, have also to be amended simultaneously, and it is only then the sections can be notified, and that is where whatever amendments are proposed in the budgets every year, it takes a considerable time to notify most of the amendments of the GST law. Accordingly, now this notification has been issued notifying the amendment in the section 53, that is the substitution of section 50 subsection 3 with the revised subsection, which now very clearly says that interest shall be payable only in cases where input tax credit has been wrongly availed and utilized. Simultaneously, the government has also inserted Rule 88B retrospectively, that too, which clarifies a certain aspect with respect to applicability of interest in under section 50 subsection 1, as well as reversal under section 50 subsection 3, applicability of interest. Now, what this amendment in section 50 subsection 3 and the Rule 88B, which has been notified, it says that in case wherever the tax has been paid in the return and input tax credit has been wrongly availed and utilized, the liability to pay interest shall arise from the date of such utilization, and interest shall be payable where the actual reversal of ITC or the payment of such ITC has been done. Rule 88B also says that in case where the ITC balance, when the balance of ITC ledger falls below the wrongly availed ITC, it shall be deemed that the incorrect ITC availed has been utilized, and the date of utilization shall be considered in case of filing of return, where after filing of return my balance of input tax credit falls below the amount which I have incorrectly availed. In that case, the interest shall be deemed that I have utilized the ITC on the due date of filing the return or the actual filing of return, whichever is earlier. So if I file the return on 18th, then it shall be deemed that I have utilized the ITC on 18th of the month, where the due date is 20th. And if I file the return belatedly, that is, let's say on 22nd, in that case, it shall be deemed that I have utilized the ITC on the 20th of the month, that is the due date, and interest shall start applying in cases where my balance of input tax credit ledger falls below the amount of ITC which I have availed incorrectly. In cases other than the return, the date of, in cases of utilization of ITC other than the returns, the date of debit in the electronic credit ledger shall be treated as the date of utilization of ITC, and the interest shall apply from such date to the date where input tax credit wrongly availed has been reversed, or the payment has been made through DRC03 or the return, whichever mode. Under section 50 subsection 1 also, for that subsection, the rule 88B also provides certain clarification. It says that in case of delayed filing of return, interest shall be calculated on the portion of tax which has been paid by debiting the electronic cash ledger for the period of delay. And again, this will not be applicable in case where the return has been filed after commencement of proceedings of under section 73-74. So if somebody has filed a return belatedly and such filing has not happened after the commencement of a proceedings under section 73-74, rule 88B read with section 50 subsection 1 would say that interest shall be applicable only on the portion which has been paid using the electronic cash ledger at the time of filing the said return. In all other cases, that is where return has not been filed, but ITC, in all other cases, that is a section under where the return has been filed after the commencement of proceedings under section 73-74 or other cases, interest shall be calculated in case of an amount which remains unpaid. So if at all there is any liability which I have not disclosed at all in the return that I have filed, it seems that rule 88B read with section 50 subsection 1, it tries to cover those scenarios as well, wherein the interest shall be calculated on the amount which remains unpaid. While it has not been expressly mentioned, looking at the language that has been used in rule 88B, even if you have had ITC, but this payment is with respect to not the wrongful availment of ITC, but for some other payment, then interest shall be applicable on the amount which remains unpaid. Certain other amendments with respect to measures of trade facilitation, the participants may recall that there was a provision notified in the there was a provision which was there in the Finance Act 2022, which now allows transfer of balance of IGST and CGST balance lying in the electronic cash ledger to different registration of the same PAN number, that is the distinct entities specified under section 25. Earlier, was transferred was only allowed within the same registration amongst the different heads. That is, if I had cash lying in, let's say, a tax head of CGST and I had to make payment of late fee of IGST in the same registration, I could file the form and transfer the balance of cash within the same registration and utilize the cash payment for the output tax liability of the different sort of liability that I have. Now, the provision says that I can transfer the cash balance that I have, let's say in Maharashtra registration, and if I have that excess balance which I'm not going to use it for any other payment, I have IGST and CGST balance available in the electronic cash ledger, I need not go through the refund route. I can transfer that balance of cash ledger in the Maharashtra registration to another registration, say Gujarat, where I am actually going to have liability to be paid in cash. So it gives a relief to the taxpayers by going through the refund in one registration and then depositing cash at the other registration. Now the balance of cash can be transferred from one IGST registration. The IGST and CGST balance can be transferred to another registration. It is to be noted that no transfer shall be allowed if there is an unpaid liability available in the electronic liability ledger, and it is expected that GSTN shall put in such checks that if at all any liability is available in the electronic liability ledger, in that case, the ITC balance to different registration shall not be allowed. Another important notification which has been issued, that is the time limit to issue an order under section 73 with respect to financial year 2017-18 for refund of any tax not paid, short paid, or erroneously or input tax credit wrongly availed or utilized. In that case, the time limit to issue an order has been extended till 30th of September 2023. This time limit was expiring in a certain period of time. I believe the time limit for filing of annual return for the financial year 17-18 were extended till the first week of February 2020. The time limit for issuance of an order is 3 years from the due date of annual return. I repeat, 3 years from the due date of filing of annual return. So people who have filed the annual return without waiting for the extension and had filed the annual return for 17-18 well in advance, for them as well, the time limit for issuance of an order under Section 73 started, the 3 years period started from the due date of annual return, which was in February 2020. So 3 years from that period. Now, in view of the delays that had happened in terms of COVID and a lot of relaxations that were provided by the government in view of COVID, this extension has also been provided. Now the order in respect of financial year 17-18 audits in all these cases are already going on at a lot of corners, and there were pressures on the department officers to conclude the audit as soon as possible. Now it will get some breather, but at the same time, the assessment would also get delayed, and the department will have now time to issue an order up to 30th of September 2023. And accordingly, they have time limit of issuance of show cause notice, which would be 3 months before this date of 30th of September 2023. There is another welcome amendment in the GST rules. It says that in case wherever the registration of a person has been revoked due to non-filing of returns within the due to non-filing of returns as provided under the relevant rule, that is for a period of 6 months or so in case of a regular dealer, and for 2 quarters for the other dealers, the registration was getting automatically suspended on the GST portal if you have not filed the returns for the prescribed period. Now, the amendment says that if the returns of the pending periods till the time when the return was the registration was suspended, if all the previous returns have been filed, then the suspension shall be automatically revoked. It is to be noted that this will be applicable only in cases where the registration has not been already cancelled. So if at all a registration has been suspended for non-filing of returns for the prescribed period and the registration has not been cancelled by the jurisdictional officer, then the returns up to the period of revocations can be filed by the taxpayer, and the registration can be revoked and regular filing can be commenced by the taxpayers. Another provision that has been introduced in the GST rules is that the viewers may be aware that the SEZ units, insurers, banks, financial institutions, NBFCs, goods transport agencies, multiplexes, passenger transport service providers, as well as the OIDR service providers have been excluded from generation of e-invoices, that is generation of IRNs. These taxpayers have been excluded even if their turnover exceeded the limit that is contained in the law. Currently, the turnover limit is 25 crores. So even if all these taxpayers, their turnover excludes 25 crores, they are still not required to generate an e-invoice, that is an IRN. Now, these people will also have to have a declaration on their invoice stating that even though our turnover exceeds the prescribed time limit, prescribed turnover limit under Rule 48 sub Rule 4, we are not required to prepare an e-invoice in terms of the said rule. This will also help the recipient to bifurcate their suppliers and also undertake a proper due diligence as to whether their suppliers are actually required to generate an IRN and they are not doing so, or whether they are not required to do so. This becomes utmost important because the law says that wherever a taxpayer is required to generate an e-invoice, and if it does not do so, then such invoice shall not be considered as a valid invoice in the eyes of the law. In such cases, viewers may appreciate that in order to avail input tax credit, I have to have a valid invoice. So in case where a person is required to issue a valid e-invoice or have an IRN on his invoice, and if he is not doing so, it is on because of the default of this supplier, my input tax credit is going to be denied. Even if he has uploaded his invoice in his GSTR1 on a timely basis, it is reflected in my GSTR2B, I will still be denied the input tax credit later on because my supplier has not generated an e-invoice which he was supposed to. It is also to be noted in this case, now the turnover limit in case of e-invoices is being proposed. There are a lot of news items that are being floated, which are saying that now the government is ready. In fact, in the past few days, there were also news floating around that the government has started the sandbox portal for taxpayers having a turnover limit below 10 crores. So it seems that the government is moving ahead with their decision of reducing the turnover limit and bring within the ambit of e-invoice or IRN as many taxpayers as possible, so that the flow of information is on a real-time basis and the government gets all the data that they require. So not only people who are falling below the criteria or within the criteria of this 25 crores to 10 crores and then thereafter 5 crores, it is not only their prerogative to ensure that they are generating e-invoices, it is also the prerogative of the purchasers to ensure that their suppliers are generating e-invoices. Otherwise, at a later stage, with the time limit of assessment, which has already been extended for 17-18 and 18-19 and 19-20, so on and so forth, or these financial years are going to be at a much later date. The government has time till that point in time to deny the input tax credit. So it is also essential for the recipients also to ensure that their taxpayers, whoever are required, are generating e-invoices. Another important changes through the GST rules, that is to the explanation 1 to the rule 43 with respect to exemption consideration of sale of duty credit scrips in case of exempted supply. What has been provided through this amendment in the CGST rules is that the sale of, the audience would be aware that the sale of duty credit scrips is exempted under the GST law. Now, there was a question as to whether what amount of reversal am I required to make when I'm making the sale of duty credit scrips, because the duty credit scrips are available to me whenever I'm making export of goods. These duty credit scrips are MEIS, ACIS, or now the road tax scripts. So as such, I am not directly using any input services or not having any inward supplies for these duty credit scripts. So whether this sale of duty credit script would sit in my total turnover and I will have to proportionately reverse all my common input tax credits such as auditors invoice, etc. There was a question floating around, and a lot of show cause notices have been issued on this ground to many taxpayers. This comes as a respite that while these duty credit scripts would continue to be treated as exempted supply, these duty credit scripts will not be included in your turnover of exempted turnover for the purpose of calculation of reversal under Rule 42 as well as Rule 43. This explanation has been inserted in Rule 43, explanation 1 to Rule 43, which is meant for Rule 42 as well as Rule 43. So for both the rules, duty credit scripts shall not be included in the turnover of exempted supply, and no reversal shall be applicable. Only question to ponder is, since this has been inserted as an explanation to the Rule 43, whether a position can be taken that this explanation applies retrospectively. It has not been expressly mentioned. Excuse me. It has not been expressly mentioned in the rules that have been inserted as to whether it will be inserted retrospectively or not. So a question remains as to whether I can take the benefit in case of my ongoing show cause notices, or if at all for the previous period, even if I have not received the notices, if I receive it in the future, can I take the benefit of this explanation for the past period, that is before July 2022, is a question that will have to be pondered upon. Another measure of trade facilitation is that in case of erroneous refund, which is to be paid back in cash, it has been provided that wherever a person has taken an incorrect refund in cash, and wherever such person gives back the refund in cash, the amount of credit, the amount that is paid back, the erroneous refund, shall be recredited to the electronic credit ledger of the taxpayer. and a form by the name of GST PMT03A has been notified. There is also a prescribed procedure which has been mentioned for it in case of how to take a recredit of this refund which has been paid back in cash. Measures of trade facilitation, another is that continuing the practice of the previous years, that is 2017-18, 2021-22 also, filing of annual return in form GSTR 9 and 9A has been exempted in case of taxpayers having an aggregate annual turnover of up to 2 crores. So taxpayers having an annual turnover of up to 2 crores in the financial year 2021-22 for all the registrations within the same PAN shall not be required to file annual return in form GSTR 9 and 9A. To the best of my knowledge, an announcement with respect to filing of 9C with respect to taxpayers having a turnover between 2 crores to 5 crores, which was hitherto exempted from the financial year 2017-18 to financial year 2021, which was continuously being exempted, filing of 9C. Taxpayers having turnover between 2 crores to 5 crores were only required to file GSTR 9 and not 9C. No announcement as yet has been made for such taxpayers. Another measure of trade facilitation, now the payment options of UPI and IMPS have also been included and the forms have been modified. The GSTN shall soon implement these modes of making payment to the GST portal in the electronic cash ledger. You can now make payment through UPI and IMPS, which would definitely facilitate the non-reflection of credit balance, the balance of cash in the cash ledger at the FAG end of the due date of the filing of returns. Taxpayers have been facing these issues. So I'm pretty sure that these two additional options of UPI and IMPS are going to help the taxpayers. Another relaxation that has been provided is that the quarterly statement to be filed by composition dealer GST CMP 08, the due date, which is for the quarter June 2022, has been extended till 30th of July 2022. Similarly, these composition taxpayers are required to file GSTR 4, that is the annual return, for the financial year by the 30th of each financial year. So for financial year 21-22, the due date of filing GSTR 4 was 30th of April, which has now been extended till 20th of July 2022. The composition dealers should take benefit of both these exemptions and should file their returns before the end of July as provided. Now, there are certain changes which have been implemented with respect to refunds. So all these changes that have been notified, I have clubbed together. There are certain notifications which have been issued. There are certain changes which have been made in the rules, certain small clarifications issued. I have put it all under the same category so that it's easier for a reference that these are all changes that have been affecting refunds. The first and foremost is that in case of export of goods, without payment of duty, the value of exported goods for the purpose of claiming refund shall be taken as lower of either the FOB value or the value declared on the tax. There are many cases pending right now wherein the taxpayers have claimed refund in case of their invoice value, which was on a CIF basis. Their ultimate contract with their customers was on a CIF basis. There was a problem, there was an issue which was being raised by the department at the time of granting refund. They were considering the FOB value available and granting a refund on the FOB value. Naturally, the CIF value, which includes the insurance, the cost of insurance and freight as well, would be a higher value. The refund was being granted on a lower value. Now it has been put it in the rule that the refund shall be given only on the FOB value or the value which is declared on the tax invoice, whichever is lower. In case of mismatch of data between the shipping bill and the GSTR1 that has been filed by the taxpayer, it shall be deemed that the application for refund has been filed only on the date on which the mismatch has been rectified. So if at all there is a mismatch between GSTR1 and shipping bill, of course, the refund application was not going ahead, but now there is an additional restriction which says that the refund application shall be deemed to be filed only on the date when you have rectified the mistake. So if at all there is a time barring which is approaching and the mistake has not been rectified before the due date, then the exporter might be in trouble and there is a possibility that the refund might be rejected, stating that because the correction was made after the due date, it has been deemed that the application has been filed after the due date, hence the refund applicable may be rejected. So it is one has to keep in mind that not only filing of refund application is important, following up for the mismatch and rectifying it before the due date of filing the refund is also of utmost important, which the viewers may note. Another very important amendment to the rules have been made with respect to inverted duty structure. The viewers may recall that in case of VKC footsteps, earlier the Honorable Gujarat High Court had said that the refund of input tax accumulated in respect of input goods as well as input services shall be allowed. However, the Honorable Madras High Court had given a dissenting view. The matter ultimately traveled to the Honorable Supreme Court, wherein the Honorable Supreme Court held that it is the prerogative of the government to give refund of one set of inputs and not give the refund of the other sets of input, that is input services, which is well within the powers of the parliament and they can exercise it. However, at the end of the judgment, it was pointed out by the counsels arguing for the petitioners that the formula which has been mentioned for refund in case of inverted duty structure, it is tilted in favor of the revenue, because what is happening is in the formula, I have to first put the net ITC, then I have to put the turnover of inverted duty structure and divide the same with the total turnover. And then I get the proportion of net ITC, which is available to as a refund to me. Now from that, I have to reduce the input tax credit that I have actually utilized for making payment of tax on the goods which are covered under inverted duty structure. By way of an example, let's say I have outward supply of goods which is which is covered under the rate of 5% of GST, whereas my inputs fall under the rate of 18% as well as 12%. Hence, I am covered under the inverted duty structure mechanism, eligible to take credit. Now, my input services attract 12% GST and input goods attract 18% GST. In view of the judgment of Honorable Supreme Court, I can take a refund of only the 18% of GST that I have paid on my purchases of inputs. Now, when I'm making the payment of 5% on my outward side, I have to first adjust the 18% tax that was available to me proportionately towards my output tax liability and reduce the same from the net ITC that is available as a refund to me. And the formula only contained the ITC that is availed with respect to input for the payment of tax. It was pointed out to the Honorable Supreme Court that the taxpayers are at a serious disadvantage. On one hand, input tax credit availed in respect of input services are also not made available to them. On the other hand, they are also not considering the input services to be used against the payment of inverted duty structure. So there is a blow on both the sides to the taxpayers, and the Honorable Supreme Court had directed the GST Council to take this into consideration and allow proportionate utilization of input tax credit. So while many people were under an impression that now when the press release of the GST Council meeting was out, many people were under an impression that now refund of input tax credit in respect of input services would also be allowed. It is to be noted that that is not the case. The amendment which has been made only says that while calculation of the tax that you have paid on your outward supply, which is covered under the inverted duty structure, we will assume that you have utilized the input tax credit on input goods as well as input services in an equal proportion and reduce that amount from the refund amount of net ITC that is available to you. So the refund of net ITC shall be proportionately available, which would be now a little bit more as compared to the previous formula, wherein it was only assumed that I have utilized input tax credit only from input goods and not from input services. So now my refund will marginally increase to the extent of proportionate ITC that I'm allowed to use for making payment of tax on my outward supply. That is it. I am not getting, or the law is not amended to give the refund of input tax credit accumulated on the input services. It stays as it is. Only effect of the judgment of Honorable Supreme Court at para number between 101 to 110, whatever observations were made by the Honorable Supreme Court, that have been given effect to. As we saw earlier that the time limit to pass an order by the authorities have been extended. Similarly, there is a relaxation that has been provided with respect to claiming of input tax refunds. So if at all I have an input, I have to claim refund, then the period between 1st of March 2020 to 28th of February 2022, this period shall be excluded for the period for calculation of the period for claiming of refund. So ideally there is a time limit of 2 years for claiming of refund. So if at all, let's say my relevant date was 1st of February 2020, and I had 2 years from the said date to claim the refund, which was expiring on 31st of January 2022. Now this period of 1st of March 2020 to 28th of February 2022 shall be excluded. So now I would have another 22 months to claim the refund. So out of 24 months before 1st of March, if 1 month or 2 months, whatever months were passed, only those months will be deducted from the period of limitation after 20th of February, and the remaining months shall start. So the limitation periods shall start from 28th of February 2022. Again, if my relevant date occurred between the period of 1st of March 2020 and 28th of February 2022, my limitation will start from 28th of February 22, or in fact 1st of March 2022, I will get 2 years for claiming of refund. So if my relevant date, let's say, was 38th of June 2020, then my limitation period starts from 1st of March 2022. Only few months have passed. So taxpayers can avail the benefit of this notification and claim refund. This is in line with the judgment of Honorable Supreme Court. And in fact, the board seems to have gone a step ahead and given more time to the taxpayers to claim refund. Giving one hand and taking the other hand, the time limit of recovery of erroneous refund has also been extended. Naturally, if the taxpayers are being given time to claim additional refund, the department would also want additional time to claim erroneous refund. So if at all there was an erroneous refund that was claimed by a taxpayer, the limitation period applicable for the department would also exclude the period of 1st of March 2020 to 20th of February 2022 for calculation of time limit for recovery of erroneous refund. Everybody might be aware that in case of when goods are admitted to the special economic zone, in order to claim the zero rating benefit, the specified officer is required to endorse the the invoices which is issued for input goods or input services by the supplier. This particular invoice, the language of Rule 89 earlier said that it has to be endorsed by the specified officer. Now it says that it can be endorsed by the specified officer or an authorized officer as defined under Rule 2 of Gst Rules. So now the rules are in parity with the CGST rules are now in parity with the Gst rules. A special procedure where refund has been withheld has been provided, as well as an additional clause been added to Rule 96.4. So Rule 96.4 that a refund shall be withheld in case where a jurisdictional officer has made a request to withhold the refund, or when the customs officer determines that the goods are exported in violation of the Customs Act. In these two cases, either your jurisdictional officer has made a request to withhold the refund due to certain suspicious reasons, or the customs officer has determined that the goods which are exported are in violation of the provisions of the Customs Act. In that case, Rule 96.4 provided that the refund shall be withheld in those cases. An additional clause has also been added, which says that the refund shall also be withheld if, on the basis of data of risk analysis and risk parameters, if the department is of the opinion that the verification of the credentials of the exporter, including the availed ITC which is availed by the exporter, the verification of credential as well as the ITC availment needs examination. If at all the government is of the view, then also the refund shall be withheld under Rule 96.4. The above two cases which I mentioned are covered under clauses A and clauses B. Now this is another clause C which has been introduced, and yesterday there was a notification which said that for the purpose of this clause C of section 96 subsection 4, the Principal Director General or the Director General of DGRAM CBIC has been given powers to exercise the responsibilities given under this Rule 96.4 subclause C throughout the territory of India. So if at all the DGRAM is of the view that any exporter across India, the credentials of such exporter needs verification, or his availment of input tax credit needs verification, then on the observation of DGRAM across India, the refund shall be withheld. And in all the above cases, the refund application shall be transmitted in form GSTR1, in form GSTR RFD01 to the proper officer, and an intimation shall also be made to the exporter that your refund has been withheld due to so and so reasons, and now your refund application is being transferred to your jurisdictional proper officer. And once this application has been transferred, the application shall be dealt with by the officer in accordance with the provisions of Rule 89. That is the normal procedures covered under Rule 89 of the CGST rules for granting of refund. As I was mentioning earlier, refund of erroneous refund that is paid back in cash, a procedure has been prescribed under the law rules. Not only the GST PMT form 03A has been notified, the rules also contain a certain procedure in this regards. So it says that wherever a person has claimed an erroneous refund and the same has been returned by him along with interest and applicable penalty, the erroneous refund shall be recredited to the electronic credit ledger of this person. Refund of this would be in cases of refund of ITC obtained in case of Rule 96 sub-rule 10, refund of unutilized ITC on account of export of goods or services made to either export or made to SEZ developers, refund of unutilized ITC due to inverted duty structure. All these cases wherever incorrect availment of ITC has happened and the taxpayer has returned the tax amount in cash along with interest and penalty, then recredit shall be allowed. Now, what is the mechanism for these cases? Number one, the payment should have been made along with applicable interest and penalty wherever applicable, though through form GSTR DRC 03. The reasons for making the payment to be mentioned in the tax box shall be as deposit of erroneous refund on account of the aforementioned cases. Again, this functionality of getting the online refund has not been provided. I mean, the recredit has not been made fully active on the GSTN portal. Accordingly, it has been specified that till the time this functionality is made available online, the taxpayer may make a written request to the proper officer in a prescribed format, and the proper officer, after verifying the application, he shall recredit the erroneous refund within 30 days from the date of receipt of the request or from the date of full payment. So if at all I make the payment before making the full payment, then 30 days shall be calculated from the date of making actual payment. So wherever an erroneous refund was claimed and the taxpayer has paid it back along with the applicable interest and penalty, the taxpayer can approach now the jurisdictional officer with a written request, and the jurisdictional officer within 30 days shall give a recredit of the erroneous refund in the electronic credit ledger. Moving ahead with respect to the rate changes, there have been many notifications that have been issued. In this case, first of all, there are a lot of exemptions that have been withdrawn. The first exemption that has been withdrawn is that services provided by the Department of Post by way of speed post, express parcel post, life insurance services, these were all mentioned in the exemption notification. That is when they are provided by the Department of Post, but were covered under RCM. So they have been now removed to the RCM, and accordingly the exemption entry has also been withdrawn when these are provided by the Department of Post and are now covered under the forward charge mechanism. An exemption has been granted in case where the services by the Department Post are provided by way of postcard, inland letter, book post or ordinary posts, wherein the envelopes are weighing less than 10 grams. Another important exemption that has been withdrawn is services by way of residential dwelling for use of as residence, where the residential dwelling is rented to a registered person. Now, services by way of renting of residential dwelling as a residence were exempted. This entry has been modified, and whatever I have underlined has been inserted in this exemption notification, meaning thereby whenever the services by way of renting of residential dwelling for use as a residence has been given to a person who is a registered person, in that case the exemption shall not be available. And we will also see when I take up the reverse charge mechanism notification. When I take the reverse charge mechanism notification, in that case, we will see what are the impacts, what is the impact of this withdrawal of this particular entry. As of now, what we have to understand is that services by way of renting of a residential dwelling as a residence, where this residential dwelling is rented to a to a registered person, is not exempted and shall be taxable. Again, this was entry number 12 in the exemption notification. Now there is an entry number 14, which is also on the similar lines, that is that it deals with accommodation, etc. The services by hotel, inn, guest house, club, campsite, by whatever name called, for residential or lodging purpose, in case where they were having a value of supply of a unit accommodation below 1,000 rupees for a day or equivalent, wherever the rental was less than 1,000, in that case exemption was there, that is no GST was applicable. Now this exemption has been withdrawn. So in case of services by a hotel, inn, guest house, campsite, by whatever name called, GST will attract from the first rupee, that is whatever the amount is being charged by hotels, etc., GST will start becoming applicable. This is a very important withdrawal of an exemption, and these two exemption notifications, if somewhere to put certain dots together, there was a advance ruling in case of Tagar Vasudev Amrish, wherein the advance ruling authority had held that wherever a residential, so quickly on the facts of that case, a person had a building, the applicant had a building which was available to him, and he was giving that building to one a registered person that who was on the business of running hostels. Now that hostels were providing rooms within that building to students or working professionals and the equivalent rental for 1 day was not crossing 1,000 per day, in that case, the outward side never attracted tax. That is, these hostels did not have to pay tax. And on the inward side, they had filed an advance ruling saying that whether this building which is taken on rent by these hostel owners, whether GST would be applicable on that or not. The advance ruling authority as well as the appellate authority of advance ruling held that GST would be applicable because the person who is taking this building on rent is not for residential purpose and he is intending to run a hostel in this premises. The applicant approached the Honorable High Court of Karnataka, and the Honorable High Court held that ultimately the building was being used for residential purpose of the students or working professionals, and the building is meant for residential dwelling and is squarely covered by this exemption notification. Hence, GST would not be applicable when a person is renting a residential building to a person who is running a hostel, and ultimately people are utilizing this building for the purpose of residential accommodation. That was the judgment of the Honorable Karnataka High Court, which came in only a few months ago, probably around somewhere in February 2022. Now, whether a direct effect or an indirect, as we were discussing, the residential dwelling used for a residential purpose. So to put in perspective the case that we discussed, now the applicant, if he is giving this entire residential building to a registered person, then irrespective for whatever use it has been given, the exemption would not be available. Who would be liable to pay tax? We will deal in a couple of slides later. Similarly, now when the hostel owners are giving this hostel on rent, while hostel is not expressly mentioned in this entry of notification, a circular which was earlier issued by the department with respect to this 1,000 exemption, it was mentioned that this 1,000 exemption shall also be available to hostels because they are at par when compared to hotels and other guest house, etc. So now this, it seems that this entry number 14 may cover these hostel owners as well, and this rental of 1,000, that was rental of up to 1,000 per day, which was exempted till now. Not only these categories that have been specified, probably also the hostels would get covered. So in the case of advance ruling that we discussed earlier, the tax on renting of the building would also be payable, ITC would be available, and subsequently when it is rented out, tax might be payable. Another entry which is important and has been, there has been a lot of hue and cry across the healthcare industry, is that services provided by a clinical establishment by way of providing rooms other than intensive care unit, that is ICU or critical care units, CCU or ICCU or neonatal care units. Other than these units, wherever a clinical establishment is providing services by way of providing room, having room charges exceeding 5,000 per day is excluded. So there is an exemption entry which says that healthcare services provided by clinical establishment are exempted. Now beneath that entry, it says that services provided by a clinical establishment by way of providing a room, having room charges exceeding 5,000 per day. If this is the case, then the above exemption entry shall not be applicable. Now one has to see whether, if at all my per day room rent is exceeding 5,000, whether I will be taken entirely out of the exemption notification is a question to ponder, or I have to separate the charges of room from my hospital services, because we are aware that in case where a person has to take a treatment for a few days, normally the services are provided by the hospital are as a package. They give it as a complete package with a lump sum fee. Of course, at the time of issuance of bill, bifurcation would be given with respect to different elements, but ultimately what has been agreed is an entire package. Additionally, when somebody gets admitted to a hospital, he is not intending to get a room within the hospital. His intention is not to get the room at the hospital on an isolation basis. What the person would go to an hospital with an objective is to get a treatment at the hospital. So whether if I am going to the hospital as a treatment and the room charges are provided to me as an ancillary supply, where my main supply is in respect of healthcare services, whether even after this particular entry and there is the bifurcation of the room rent says that the room rent per day is more than 5,000, whether still the exemption would be withdrawn, or on the basis of principles of composite supply, still the taxability of my main supply, that is the healthcare services, shall be applicable, is a question. For that, again, we circle back to the entry. The way it is worded, it says that wherever this per day room in a hospital exceeds 5,000, nothing mentioned in this exemption entry shall be applicable. So this needs a very detailed analysis on what is the impact of this particular entry. Another exemption which has been withdrawn is that in case of a goods transport agency, wherever it had a multiple consignments, small consignments, and each consignment did not exceed a value of rupees 750, and where a single consignee does not have a 5,000 value, more than 5,000 value, a single consignment on which was being transported in a single carriage, both of these were exempted. Now this has been also withdrawn. So irrespective of the value of a small consignment along with other consignments, or a single transport or a single consignment transported in a single carriage, no exemption shall be available and GST would be applicable. Another entry of notification would not say that exemption has been withdrawn, but the exemption has been curtailed. Earlier, the exemption notification said that services by way of storage or warehousing of cereals, pulses, fruits, nuts, vegetables, spices, copra, sugarcane, so-and-so was, whatever is mentioned was exempted. Services by way of storage or warehousing of all these items were exempted earlier. Now this exemption entry has been curtailed, and it says that services by way of storage or warehousing of cereals, pulses, fruits, and vegetables, only these three things would be covered under the exemption and not the other things. Similarly, hitherto exemption was available with respect to the services provided by RBI, Insurance Regulatory Development Authority, Security Exchange Board of India, Food Safety Authority, and the GSTNs when provided to business operators. This provided to food business operators is applicable for FSSAI entry. So the services which have been provided by RBI, IRDI, SEBI, FSSAI, and GSTN, which were exempt till now, services provided by them are no more exempted and tax would be applicable. There was an entry which this next entry was recently introduced and is now being excluded. Services by way of fumigation in a warehouse for agricultural produce, which was exempted, is the exemption entry has now been withdrawn. Services by way of slaughtering of animals has also been, the exemption has also been withdrawn. Services provided by cord blood banks by way of preservation of stem cells and any other services in relation to such preservation is being withdrawn. There was an specific exemption which was provided. An interesting thing to note here is that under the service tax regime, also there was an exemption entry by similarly as it is there in the GST law, there was an exemption entry of healthcare services. Various notices were issued to the cord blood banks stating that cord blood banks are not covered in the exemption entry. They are not providing healthcare services, and accordingly they would be liable to pay GST. Subsequently, an entry was introduced in the exemption notification without mentioning whether it's retrospective or not. An entry was introduced which was very similar to the entry that we are looking at. In the exemption, mega exemption notification under the service tax law, an entry was introduced which said that services provided by the cord blood banks by way of preservation of stem cells or any other services in relation to such preservation would be exempted. The cases are still pending before the Honorable High Courts, wherein these stem cell service providers are saying that we are covered by the default healthcare services, and this exemption notification specifically provided to us is only by way of an abundant caution. Even if it was not there, we were covered under the definition of healthcare services. That litigation is still going on under the service tax, and to the best of my knowledge, it has not been decided by the Honorable High Court, where this petition has been pending. There was one petition which was filed which said that this notification, this exemption entry has to be read retrospectively in view of the various disputes that were going on. That particular petition was disposed of by the Honorable High Court, saying that it doesn't seem to be a retrospective. However, the petition which said that the services provided by the cord blood banks for preservation of stem cells are covered under the main entry of healthcare services, that petition, to the best of my knowledge, has not been disposed of yet. And the fate of this withdrawal of exemption may also depend on the wordings of the judgment as to what extent that same interpretation can be brought in. If at all the High Court holds in favor of the assessee, whether that analysis or that analogy can be applied in the GST law or not, only time would tell. There are also certain exemptions pertaining to the tours and travel industry, removal of various exemptions. So earlier, air travel embarking from or terminating in an airport located in the state of Arunachal Pradesh, Assam, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim or Tripura, or Bagdogra, which is located in West Bengal, in those cases exemption was available. Now the exemption has been restricted only to economy travel. Any other air travel shall not be eligible for this exemption. Similarly, services provided by way of transportation of railway equipments or materials by way of rail vessel from one place to another in India, the exemption has been withdrawn. Services provided by biomedical waste treatment facility to a clinical establishment by way of treatment of biomedical waste, which was introduced in view of COVID, the exemption has now been withdrawn. In case of tour operator services provided partially to a foreign tourist, wherein the tour has been partly conducted in India and partly conducted outside India, the exemption is provided. This is a new exemption which has been introduced, and in these cases the exemption would be available to the proportionate number of days where the foreign tourist has completed his tour outside India. For the portion of tour which is completed in India, tax would be payable. This is also made subject to a maximum limit of 50% of the entire consideration. So if at all the foreign tourist has stayed 40% of the time, 40% time days outside India and the remaining number of days in India for his entire tour, in that case, exemption of 40% of the total consideration shall be available. In case the number of days out of the total days which the foreign tourist has spent outside India are, let's say 60%, in that case, exemption shall be restricted to only 15%. 50%. The definition of tourist has also been provided in this definition, wherein the foreign tourist shall mean a person which is not normally resident in India, who enters in India for a stay of not more than 6 months for a legitimate non-immigrant person. Only that person shall be considered as a legitimate non-immigrant person. So other two exemptions which are mentioned in the slide have inadvertently seemed to be crept up in the exemption of travel and tours industry, which are anyways independent of tours and travel industry. There are also certain modifications to the existing exemption notifications. Services by way of training or coaching in relation to in recreational activities, so the entry read in this way: services by way of training or coaching in recreational activities related to, and then there were two entries without the blue font. Now this recreational activities relating to has been removed from the main entry, and it has been added to the first entry only, wherein it says that now the services by way of training or coaching in recreational activities relating to art and culture would be exempted. However, it is important to note that these recreational activities, that the training or coaching of these recreational activities pertaining to art and culture is provided by an individual. If at all it is provided by anybody other than individual, then this exemption is not available. Similarly, services by way of training or coaching in sports by charitable entities registered under section 12AA or 12AB of the Income Tax Act shall be exempted. Earlier, the entry of 12AB was not available. Now the same has been inserted, and the exemption would be available accordingly. Now, something which has been a part of discussion at various corners across the country, the changes in reverse charge mechanism are now GTA has now an option to charge 5% GST on forward charge basis also. Till date, in case of GTA services, either the GTA service provider was supposed to charge 12% on forward charge basis and avail the input tax credit. If the GTA service provider had not charged GST at the rate of 12%, then automatically the recipient of the services was liable to pay tax at the rate of 5% on a reverse charge basis. Now, another entry has been added which says that the GTA has an option to charge tax on a forward charge basis at the rate of 5% without availment of ITC. In that case, even if he has charged 5%, then the recipient is not required to pay tax under reverse charge mechanism. So if at all the GTA has charged 5% tax or 12% tax, the recipient is out of RCM and he need not bother about the payment of tax, so far as either 5% or 12% has been charged by the GTA service provider. It is to be noted that reverse charge still is at 5%. The recipient does not have an option to pay the tax at higher rate, and naturally no one would want to pay tax at a higher rate irrespective of whether ITC would be available or not. Second one, what we were discussing earlier in the exemption notification, in continuation to that, would like to discuss this one entry at a bit of length. Services by way of renting of a residential dwelling to any registered person is now covered under reverse charge mechanism. So at one side, the exemption has been withdrawn, and on the other hand, it has been put under reverse charge mechanism. So let us explore various scenarios in this case as to what happens if at all a person is taking or a person is providing a residential dwelling on a rental basis. Say a person A has a residential dwelling in a premises and he is giving this residential dwelling to a company, and the company is going to use this residential dwelling for the purpose of using it as a guest house for its employees who keep on visiting at various cities. So the company is in requirement of a guest house and approaches a person for his residential dwelling, which shall be used by the employees of this company for residential dwelling. In such cases, considering this entry, the company which is taking this residential accommodation on a rental basis shall be required to pay tax under reverse charge mechanism. A next question, or in fact, a fact that I had earlier discussed was that a person is taking a building to run either a hotel or a hostel from a registered person, or a residential unit is being converted into a corporate guest house, or it is converted into a short-term, short-stay hotel, or a guest house for a longer period of accommodation for a few months. In that case also, the person would be registered. That is the reason that the entry of 1,000 per day has been withdrawn from the exemption, so that nobody claims an exemption from registration as well, considering themselves as a provider of wholly exempted supply of services. So now the provider of services would get registered under the GST Act, and wherever a residential dwelling is being taken on rent, GST shall have to be paid under reverse charge mechanism. Now this reverse charge mechanism would also be applicable irrespective of the fact whether the person who is providing this residential dwelling on rent, whether his turnover exceeds 20 lakhs or not. Irrespective of that fact, this reverse charge mechanism would apply. Now, there are certain points being raised and validly so, which is that if at all somebody has a commercial premises to be given on rent, and that is his only business income, and his his activity of renting of commercial premises does not exceed 20 lakhs, then in that case, that person is not required to pay tax or even obtain registration. And because he has not obtained registration and this entry is not covered under reverse charge mechanism, renting of a commercial premises where a person has not obtained the registration, the provider has not obtained the registration, would not be liable to tax. The recipient would not be paying any tax on this amount. Whereas the same person, if he has a residential premises and is giving it on rent to a registered person, let's say there are A and B, and A has two premises, one is residential and one is commercial, and he is renting this A and B, then he is renting this commercial and residential premises to Mr. B, and who is a registered person, and Mr. B, Mr. A turnover does not exceed 20 lakhs from both of these renting activities. Mr. B would be liable to pay tax under reverse charge mechanism on the residential premises that has been taken on rent, whereas he will not be liable to pay tax on the commercial premises that is being rented to him. There is another question which is being discussed on a lot of forums, is that what happens when a proprietor who is registered under the GST law takes a residential accommodation for his personal purpose or for his personal accommodation not connected with his business. In that case, a view can be taken. It is a reasonable view that if the residential premises is not for his business purpose, there is no question of going onto the taxability under reverse charge mechanism, because for paying tax under reverse charge mechanism also, the supply definition has to be fulfilled, and the definition of supply says that supply has to be in the course of furtherance of business. So where I am taking a residential accommodation for my own personal residence purpose, it cannot be considered as for a business purpose. That is one view. The another view is PAN number of the person is same. Once he is a registered proprietor business, nothing doing, he has to pay tax under reverse charge mechanism. I am inclined to take the first view. However, the second view is also possible, and only time would tell which one is the correct interpretation. Entry pertaining to services provided by the postal department, which was hitherto covered under the reverse charge mechanism, because the exemption and it was there under the exemption notification, it has been withdrawn from there and also taken away from the reverse charge mechanism. So now the Department of Post shall be required to pay tax under forward charge in respect of the speed post, etc. services that are provided by them. Last section of the presentation with respect to rate changes. The first, there are many rate changes that have been notified or proposed by the GST Council, which have been notified in the past few days, which have been made applicable from 18th of July. The first and foremost, the biggest change that came in this rate notifications was with respect to rationalization of inverted duty structure. So in many cases, the input side tax was at a higher side and outward side was at a lower rate. In all those cases where the outward side attracted a lower rate, this lower rate has been now increased, so that the gap between the input services, the input inward side and the outward side gets reduced. The first one is job work in relation to processing of hide, skins and leather. This is in of course for the footwear industry. Again, job work in relation to manufacture of leather goods and footwear, job work in relation to manufacture of clay bricks, works. Another important is works contract services supplied to central and state government, union territories, as well as the local authorities involving predominantly earthwork and the subcontracts thereon. This attracted 5% till date. Going forward, or from 18th of July, it will be attracting 12% of GST, which is quite a substantial hike. Again, works contract for roads, bridges, railways, metro effluent treatment plants, works contract services for crematoriums, etc. The GST rate was at 12%. It has now been increased to 18%. Composite supply of works contract provided to a central government, state government, union territory, local authority, or a government entity by way of construction, erection, commissioning, installation, completion, fitting out, repairs and maintenance, renovation and alteration thereof in respect to historical monuments, archaeological sites, remains of national importance, archaeological excavations, etc. The rate has been increased from 12% to 18%. Similar, the works contract services in relation to erection, commissioning, so on and so forth, in respect of canals, dams, and other irrigation works has also been increased from 12% to 18%. Similarly, works contract services in relation to pipeline, conduits, or plant for water supply, water treatment, or water sewerage treatment and disposals, the rate has been increased from 12% to 18%. Similarly, works contract services in relation to roads, bridges, tunnels, terminal for road transportation, civil structure for National Urban Renewal Mission, civil structure for original works for redevelopment of existing slums, civil structure for original works pertaining to beneficiary-led individual house constructions under Urban Mission or Pradhan Mantri Awas Yojana. All these entries have been taken out from 12% and have been shifted to 18%. Similarly, services supplied by a foreman to a chit fund, which was till now 12%, has been increased to 18%. Similarly, inverted duty structure in case of goods with respect to the following goods, that is printing, writing, drawing ink, falling under 18%, which was falling earlier under 12%, has been increased to 18%, HSN 3215. Knives, cutting blades, pencil sharpeners, etc. Power driven pumps, this is important for handling water, such as centrifugal pumps, deep tube wells, turbine pumps, submersible pumps, and bicycle pumps have also been put into the bracket of 18%. Machines for cleaning, sorting grains, agriculture machines, etc. have been put from 5% to 18%. Machines for cleaning, sorting, grading eggs, fruits, and other agricultural produce has been shifted from 12% to 18%. LED pumps, lights, fixtures, and their metal printed circuit boards, 18%. Drawing and marking out other instruments, 18%. Solar and water heater systems, 12%. Other GST rate changes are changes with Tetra Pak has been now shifted to 18%. Tar, which was earlier tar, coke, which was earlier under 5 or 18, it has now been made under 18% without any disputes. Cut and polished diamonds, which were there's a substantial increase now. It was earlier attracting 0.25, will now attract 1.5%. And there are other few rate changes. There are also reduction in certain items. So items specifically imported for defense purpose, etc. There are certain reduction on rate changes. There is one important change with respect to prepackaged material, prepackaged goods and certain items, wherein a lot of questions have been raised and a lot of doubts are being at various corners. I would also touch upon that. So hitherto the exemption was only in respect of goods which are not pre-packaged and labeled. Of course, with respect to the specified items. Now, with respect to these goods, the taxability has moved from imposition of GST bearing a registered brand in respect of an actionable claim. So if I had a registered brand earlier for which I had an actionable claim or an enforceable right, only in respect of the specified products in these categories which were branded, GST was applicable. Now it has been delinked from whether it was in respect of whether it is in respect of particular brand or not. Now the GST rate will depend whether these goods are pre-packaged and labeled. If at all these goods are pre-packaged and labeled, then GST would apply. In other cases, these goods which are sold in loose form, GST would not apply. After the introduction of the notification, which covers a big number of items, right from curd, paneer, lassi, or grains, legumes, there are so many items which were covered under these entries. Earlier, they were taxable only if they were under a pre-packaged item and were labeled. Only if at all the seller had a brand, these goods were sold under a brand. Now it has been shifted. If at all these goods are sold under a pre-packaged and labeled condition, in that case, GST would be applicable. That is again with respect to that is applicable from 18th of July. Now this exemption or this not availability of exemption or availability is also linked with the Legal Metrology Act. So one also has to study the Legal Metrology Act for the purpose of considering whether exemptions to the pulses, cereals, rice, etc., which are earlier attracted 5% when branded or packed in a unit container, with effect from 18th of July 2022, these items would attract GST when they are pre-packaged and labeled, irrespective whether they are branded or not. So earlier, again, the tax was applicable only in cases of pulses, cereals, and rice when they were sold under a brand. Now, not only they have been, the taxability of these cereals like rice, wheat, and flour has been changed from whether they are branded to whether they are sold in a loose form or whether they are sold in a pre-packaged or a label form. Additionally, curd, lassi, puff right, etc., when they are sold as a pre-packaged, would now attract 5% of GST. The government has also come out with a detailed FAQ in this connection, and the Honorable Finance Minister has also put in a lot of tweets on her Twitter handle explaining the implications of this amendments that have been made. So this pre-packaged and pre-labeled has to be seen in terms of the Section 2 of the Legal Metrology Act, which says that a pre-packaged commodity means a commodity which without the purchaser being present is placed in a package in whatever nature, whether sealed or not, so that the packaged product contained therein has a predetermined quantity. So pre-packaged commodity means that the quantity is predetermined once it is put in that packet. So the supply of such commodities are having two attributes. Number one, it is a pre-package, and number two, it is required to bear declarations as required under the Legal Metrology Act and the rules met thereunder. These are the two requirements that are to be there. If such packaged commodities are supplied in a package but do not require the declarations under the Legal Metrology Act, then the same would not be covered under the pre-packaged and labeled purposes for the purpose of determining GST levy. So if at all the Legal Metrology Act does not include these commodities for making the declarations as per the Legal Metrology Act, if at all declarations are not required as per the Legal Metrology Act, then these products will not be covered in the rates or will not be chargeable to GST considering the recent amendment. So in this context, the supplies such as pulses, rice, flour, etc., these are pre-packaged food articles which fall within the purview of definition of a pre-packaged commodity and the rules made thereunder. And if these pre-packaged commodities are labeled in a packaged quantity contained up to 25 kgs or 25 kilograms are subject to certain exclusions. In that case, again, GST would not apply. So the FAQ says that for such commodities like food items, pulses, cereals, flours falling under Rule 3A of the Legal Metrology Packaged Commodities Rules, which prescribes that these commodities shall have prescribes that package of these commodities containing a quantity of more than 25 kg or 25 liter do not require a declaration, which is more than 25 kg or 25 liter does not require the declaration as per the Legal Metrology Act. In that case, GST would the FAQ says that GST would be applicable on such specified goods where the pre-packaged commodity is supplied in a quantity less than or equal to 25 kilograms. If it is more than 25 kilograms or 25 liters, because it is not required to mention that declaration as per the Legal Metrology Act, in that case, GST shall not be applicable. Another question that has been answered in the FAQ is that whether GST would apply to a package that contains multiple retail packages. For example, a package containing 10 retail package of flour containing 10 kg each. The FAQ says that if several packages intended for retail sale to ultimate consumer, say 10 packages of 10 kg are sold in a larger pack, in that case, GST would apply to such supply, because ultimately the end consumer is buying not 10 kgs but 100 kgs. These individual 10 kg are eventually meant to sell to the ultimate customer. The FAQ also says that, however, if a package of, say, rice containing 50 kg in one individual package would not be considered as a pre-packaged labeled commodity for the purpose of GST levy, even if Rule 24 of the Legal Metrology Act mandates certain declarations. So now the FAQ says that if at all there is a single package of 50 kgs, then it will not attract GST. Whereas in the previous case, what it was saying is that even if the combined package was 100 kg, the individual packages are of 10 kgs. And since it is a 10 kg package, not more than 25 kgs, that is, even though it is 100 kg package, still GST would apply because individual packages are of 10 kg. Accordingly, GST would be applicable. Another question is at what stage GST would apply on supply of on such supplies whether GST would apply on specified goods sold by manufacturer producer to the wholesale dealer who subsequently sells it to a retailer, whether the sale from the manufacturer to retailer would be applicable or not is the question. The FAQ says that GST would apply whenever supply of such goods is made by any person, whether it's a manufacturer supplying to a distributor or a distributor supplying to the retailer or the retailer supplying to a consumer. The manufacturer, wholesaler, retailer who would be entitled to the input tax of the GST charged by his supplier in accordance with the provisions of the input tax credit. So the value or the quantity value of the entire package has to be seen right from the manufacturer's end. If at all it is less than 25 kg, then GST starts applying from that stage itself and applies to the ultimate stage. Next question that is clarified in the FAQ is to whether tax is payable if supply of goods are purchased in packages up to 25 kgs by the retailer, but the retailer then ultimately sells them in a loose quantity at his shop. The FAQ says that GST applies when such goods are supplied in only pre-packaged and labeled packages. GST would apply when pre-packaged and labeled is sold by distributor to the retailer. If for any reason the retailer supplies them in loose quantity, such supply by the retailer is not a supply of a packaged commodity for the purpose of GST levy, and accordingly GST will not be applicable. Whether the tax is payable if such packaged commodities are supplied for consumption of industrial customers. In that case, again a reference of Legal Metrology Act has been provided, which says that supply of packaged commodity for consumption of an industrial customer or an institutional customer is excluded from the purview of Legal Metrology Act, and therefore it will not be considered as a pre-packaged and labeled commodity for the purpose of GST levy. So if one has to simplify this entire notification with respect to this change in taxability of all these commodities, then if as per the Legal Metrology Act, the package is of less than up to 25 kgs, that is 25 kg or less, and it is covered as a pre-packaged commodity under the Legal Metrology Act, in that case, GST would be applicable when this commodity is served in a pre-packaged, pre-labeled form. In all other cases, GST will not be applicable. There are certain other issues that have been clarified. One important point is that the Legal Metrology Act and the rules made thereunder prescribed criterions for exclusions and provide certain exemptions under Rule 26 of the Legal Metrology Act. It is therefore reiterated that if supplied in such if the goods are supplied in such manner as to attract the exclusions of the Legal Metrology Act or such exemption, then such commodity shall not be treated as a pre-packaged commodity, and GST shall accordingly not be applicable. That is what has been clarified. That is the end of my presentation. Ajay ji, should we have some time where we should be taking some questions from the audience?
Yes, sir. Please take question.
Yeah, just a second. I will switch my window and I will one by one take all the questions. The first question is any update on GST on residential quarters? So as I covered in my slide, in case a residential premises is being taken on rent by a registered person, in that case, GST shall be applicable on reverse charge basis. So such person shall have to pay tax on a reverse charge basis. So residential quarters, if they are provided by a unregistered person to a registered person, in that case, the registered person shall be liable to pay tax under reverse charge mechanism. Okay. Next question is, a building has been taken by a lodge, a GST registration person, on a rental basis and paying monthly rent, whether RCM shall be applicable under section 9(3) on this rent amount or not. I am assuming that the building is being used for the residential purpose. So what we discussed earlier is that the entire building, even if it was for a residential purpose, as held by the Honorable Karnataka High Court, that it is still for a residential purpose and was earlier available for the exemption, considering the revised entry, if at all the building is being taken by a registered person, reverse charge will apply. Next question. Now GST on lodge rentals up to 7,500 is taxable at 12%. What is the impact of the same on the room rental provided by shrine places by a trust registered as per section 12AA of the Income Tax Act, and whether GST is applicable? Okay. So in this case, there was 7,500 exemption was only earlier there. Later on, earlier the exemption was till 7,000. After 7,500, the rate actually increased to 18%. There was no exemption as such for 7,500. But I think the question particularly is in respect of rental services provided by trusts registered under section 12AA. For this question, I would request to look at the entry number 13. What we have discussed in today's presentation is entry number 12, which deals with residential accommodation provided by a person, a residential accommodation provided to a registered person. In that case, the registered person will pay tax under reverse charge. The entry, second entry is entry number 14, wherein exemption till date was up to 1,000 rupees. If at all the rent on a daily basis was 1,000, in that case, exemption was there, which has now been withdrawn. The question that has been asked pertains to entry number 13. So, premises given on a rental basis by trust registered under section 12AA, if at all you are falling in the exemption entry number 13, the exemption entry still stays. And if at all the rental does not exceed the limit provided in entry number 13, as well as you are satisfying the conditions of being registered trust, etc., exemption would be available to you. Okay. Next question is, what happens if a company is reimbursing rent amount? I would just take up what I understand is, while taking the presentation or preparing the presentation also, I had a hitch that most of the questions would come either on this residential accommodation part or probably the pre-packaged food part. And we can see that first 5 questions have been asked on the residential accommodation question. This next question is, what happens if company is reimbursing the rent amount to an employee? What happens if the rent invoice is raised on an ISD? ISD cannot pay, what I understand is that the person is trying to say ISD cannot pay tax under a reverse charge mechanism. Now, when a person is providing a residential premises on rent, exemption has been withdrawn and it has been put under reverse charge. So there is no question of the person raising the invoice to my ISD number. That person is only going to raise an invoice to me, to my address. Of course, I can ask him to put whatever registration numbers. I can ask him to put my normal registration number as well as an ISD. But it would be too theoretical to discuss as to if at all an unregistered person has mentioned my ISD number, whether I would be required to pay tax under reverse charge mechanism. In that case, any which ways, currently also, if a business entity receives an invoice, let's say from an advocate, what happens normally is that the entity or the normal registration pays tax under reverse charge mechanism, and then either by way of a cross charge or an ISD, the amount of credit is transferred to the various location, which can be done in this question. In my view, whatever location has taken this premises on rent, that location should be paying tax under reverse charge, and whatever cross charge versus ISD the company's policy is there, that should be followed. Coming to the first question, what happens if the rent payment is made by the employee and then it is subsequently reimbursed by the company to this employee? The substance of the transaction is that the services are procured by the registered person, and it doesn't matter that the payment has been made by an employee and it has been reimbursed by the company. The logical reading of the provisions of the law or giving a proper justification to what the entry of the notification is, the tax should be payable under reverse charge mechanism. Whether rice pre-packed but not labeled, whether it is taxable? Yes, even if you have not labeled, but it is covered under, if it is liable to be labeled under the Legal Metrology Act, you will have to pay tax. The tax would be applicable. Next question is, output tax erroneously excess amount paid in GSTR 3B for the month of October 18 as per notification 13/22, whether it is possible to claim refund now. Assessee is neither exporter nor under inverted duty structure. If at all you were earlier liable to claim a refund, the time limit which has been mentioned in this case is October 18. So if at all assuming that the relevant date is October 18 and it was expiring on October 2020, your limitation period is excluded up to February 2022. And in that case, you can look at it if at all you were earlier eligible to claim a refund. That 2 years period would still be there.
We need to close now.
Okay, sir.
So we can.
I think I have run past 2 minutes. They're taking.
Thank you very much, sir.
Number. Yeah.
Thank you very much, sir, for detailed derivation on the topic. You had nicely bifurcated your discussion in the various parts, like classification issue, clarification issued by the government, changes to the GST law, and measures for tariff facilitation, changes affecting refund, rate changes, etc. Also covering few questions raised by the member relevant to the topic. We also thanks participants for viewing this webinar in large number. There are more than 1,000 members live right now. We hope that they have been benefited from the deliberation. Finally, I thanks our chairman, CA Rajendra Kumar P, and vice chairman, CA Umesh Sharma, for their guidance. And also, I would like to thank our colleague, MS Imprit Kaur, Deepak Agarwal, Tanya Pandey, and our secretary of the committee, CA Samita Mishra, and also the Amit, who is supporting in this live webcast. Thank you all. Thank you once again, sir. We can now close.
Thank you, Amit. Thank you.
Please close.
Thank you everyone for joining, and once again thank you IDT committee and Chairman RK sir, Vice Chairman Umesh Sharma sir for giving this opportunity. I hope the participant found this presentation useful. Thank you so much. Thank you for the patient hearing. Have a nice weekend.
Thank you. Amit, please close.